So how can you pay 80% less tax as a day trader? So recently, I was talking to a day trader and he introduced me to an interesting idea that allows you to pay 80% less tax. And at first, I thought, that's pretty interesting. So I dig a little bit deeper and I just want to share my findings with you today. At the end of the video, I'll talk about how you can use this to your advantage and invest in real estate as well. So make sure you watch till the end. So 96.4% of you haven't subscribed yet. It is free and you can always change your mind in the future. And this month, I'm looking to help 20 professionals without a financial background to master investing and target 30% a year. So there will be more details at the end of the video. So how to pay 80% less tax as a day trader. Now, before we start, I just want to establish two basic facts about day trading. First, you cannot use your TFSA to do day trade. And I covered this in an earlier video, so you can refer to that. Now, second, when you day trade, you are considered to get taxed at the employment income rate, which can get up to around 44 to 50% marginal tax rate in Canada. So it means you do not fall under the capital gain tax, which is 25%. And I also covered this in another video as well. So is it possible to reduce taxes? And a day trader with his own corporation claims that he only pays 11% in taxes. And when I was on a call with him, I thought, wow, that is very interesting. And I believe him because I do heard of people using a corporation to day trade so that they can reduce on their taxes. So let's look at how that would pan out. So the base case is that you don't use a corporation. And here is the tax calculator where you make $100K from day trading without a corporation, and you would pay $25,375 in taxes. And that's an average tax rate of approximately 25%. And that is pretty reasonable. And in my other video, that's what I covered, and that's what our belief is when you compare it to long-term investing. Now, here's the new situation. Let's say you set up a corporation in British Columbia, or anywhere in Canada, really. You day trade within the corporation, and then you pay yourself a salary sometime later. Now, when you're looking at public companies in Canada, they generally pay a tax rate of 27%, which is pretty hefty. And this is really a combination of 15% in federal and 12% in BC provincial tax. So together is 27%. But what if you are a private company, something called a CCPC? So here's where I introduce you to the concept of a Canadian-controlled corporation. CCPC enjoys a tax benefit called small business deduction, where any income less than $500,000 will enjoy a lower tax rate. So how low is the tax rate? It's approximately 9% for federal and 2% for BC. That means your tax rate as a CCPC corporation, it's only 11%. And that is the critical component when it comes to saving on taxes. Now let's do a scenario analysis. On the left-hand side, I have just introduced you to the first scenario where you pay 25% tax, you make $100K in day trading as a person. Your taxes will be $25,375. So your take-home pay is $74,625. On the right-hand side, you'll see the day trading corporation. And the CCPC average tax rate is around 11%. And if you earn the same $100,000 in taxable income, then your taxes will actually be $11,000 in the corporation. And your net income after tax is $89,000. Now, you haven't paid this out to yourself yet, but let's pause at this point and look at the temporary tax saving. So at this level, your temporary tax saving is really the difference between the $25,375 minus the $11,000 in taxes as a corporation. So the tax saving is $14,375. That is quite significant, right? You can do a lot of things if you are able to delay tax by $14,000. So here is really the key observation. By using a day trading corporation, you can delay the heavy personal income tax rate by not paying out yourself immediately. Now, if you pay out yourself immediately, then of course you'll need to combine the amount of taxes you pay that year as well. And here's where it gets better. So let's say day trading is a business, and it is a business, you'll incur expenses. And when you look at the small business deduction of $500,000 using the lower tax rates, it is actually based on profit and not revenue. So that means you can deduct all the expenses possible that is related to day trading. So let's say you have a car when it comes to day trading. Maybe you need to drive around to investigate in businesses so then you can understand whether you want to day trade them or not. It's a bit of a stretch, but a lot of people put their cars in their corporation. So let's say you buy a Tesla that is worth $35,000, which is kind of the Tesla I want to buy. And I do cover this in another video called Wall Street Buys Me a Tesla. And we'll assume that you only use this car for work to do research because you drive around, or you might even record some YouTube videos with your Tesla. And this counts as a business expense, believe it or not. And let's say instead of using cash to buy it, you lease the Tesla, so then you're paying lease interest, and you also have depreciation. And let's say the interest is 5%, which is average in this case. So that means for a $35,000 Tesla, you pay 5% interest. That is $1,750 interest expense that you can deduct within your business per year. And let's say your depreciation is 30%. which is approximately $10,500. And the 30% is really a depreciation rate that is recommended by the CRA. So you can look up the table and look at how vehicles are depreciated over time is 30% a year. So this means the total expense that you can deduct as a business with the leased car is $12,000 for your first year. Now this number will change a little bit over time, but roughly speaking, let's use $12,000 as the assumption. So how does that change things? So let's say you expense your car in your corporation, and now your taxable income goes down. Instead of making $100,000 as day trader, you actually make less, $88,000, because you deducted your car. And this means you'll pay less tax as well, and that will be $9,680 in taxes. So after you pay $9,680 in taxes, and if you compare that to without being incorporated, you pay $25,375 in taxes, your temporary tax savings is really $15,695. So this is actually an additional tax saving of $1,320 just by expensing your car. That's pretty amazing, right? Just up till this point, I think I've already saved you $15,695 as a day trader, but it gets better. When you're looking at a business and you work from home, there's a concept called home office expense in Canada. And since you're day trading, you can also set up a home office and you can deduct certain things like your data services, your rent, part of your mortgage interest, utilities, your car lease, which we covered earlier, water, books, accounting fees, and so on. This really allows you to take part of your living expenses to be deducted under the business. And if you need to have some meals, or if your company offers your employee catering services, maybe you can deduct your meal expenses as well. But this is a little bit gray, so make sure you confirm with your accountant. So let's make an assumption. Let's assume 50% of your day trading salary can be deducted within the corporation. And the exact detail will be different from person to person depending on how you spend money. But let's go with $50,000 in expenses. So what this does is that you will now have a lower taxable income within the day trading corporation, and that is $5,500 in taxes. And this means you have a net income of $44,500. So before you even pay out to yourself, your temporary tax savings is now a lot higher. Compared to the $25,375 in taxes, you save approximately $20,000 in taxes. And by deducting your home office expense, you save an additional $5,000 in taxes. And this is where you save 80% taxes compared to not incorporating. So if you are able to set up a day trading corporation for yourself, then by all means, this will be a great advantage for you. When you think about spending money, for meals, for rent, for your house, for a car lease, you are really using your pre-tax money to pay for a part of your living expenses as a day trader. And this makes everything in Canada a lot cheaper because you're not using your after-tax money to pay for it. And this is a crucial observation. Now let's take it one step further. So let's say now you pay out yourself a salary for any remaining money that you didn't deduct as an expense. So that means your corporation actually has zero net income after you pay out a salary of $50,000. So you pay $0 in taxes in your corporation. So what does that mean? Now on the right-hand side, you'll see that your average tax rate is 20% because your income is lower, and your take-home pay is $39,825. On the left-hand side, we have the same calculation, and your take-home pay is $74,625, and then you need to deduct your $50K in living expenses, so then after that, your living expense is only $24,625. And you can immediately see the difference that you're saving $15,200. By taking the $39,825 and deduct it against the $24,625. Now, what if you don't want to take that out? What if you want to leave it in the corporation? And why would you want to do that? And this is really the mind-blowing trick I discovered when I was discussing with this day trader. And this is the last trick. And let's say you leave the $44,500 within the corporation because you don't need it, because you already deducted your car, your utilities, your mortgage, your meals within the corporation. So there's really not much expenses you need to pay for outside of the corporation anyways. So you want to reinvest that maybe into something else. And in this case, he was investing in real estate. This is really the mind-blowing part for me because now you have a down payment of $44,500 and you're able to put that towards real estate. Isn't that amazing? And that's the end of this video. So when it comes to investing, myself is really a long-term investor, and my target is to make 30% a year. So even though day trading and setting up a day trading to save on taxes intrigue me, I'm a long-term value investor. And when I'm targeting 30% initially, it feels like a stretch goal for me. But once I achieve it with a proven investing strategy, I created a quiz or a health check for you to understand where you're at when it comes to investing. So here is the health check, the 9 questions to become a successful investor. And if you are able to answer all 9 questions here and you have a good answer that is all working together, then I think you're on your way to make 30%. So this includes your stock selection process, risk management, portfolio management, entry, exit, profit multiplying mechanism, and your strategy to deal with market crash and to reduce your taxes. So if you want me to take a look at your response, then you can draft it up in detail and send it to my email address, which is eric@5minuteinvesting.com. And I'll take a look at it, and maybe we'll even hop on a call if there's any improvement opportunities. And if you're interested in my investing approach and how I got 30% return or more in the last 5 years, then you can attend the free training on my website. So I have prepared a 4-hour free training for full-time professionals or retirees without a financial background, and you want to learn how to manage your own portfolio long term, and you want to get 30% return a year. So I packed a ton of value within this video, so make sure you grab a cup of coffee or two and then take some notes along the way. So for this video, I just want to celebrate another 3 case studies within Investing Accelerator, where Adrian made 78% gain in 2 months from Outrix, Brad made 84% gain from Outrix in 30 days, and he also made 65% gain from ON in 7 months. So these are a fantastic return. Congratulations to Brad and Adrian. You're doing a good job. And for Investing Accelerator, I'm looking to help another 20 professionals this month without a financial background to master investing and target 30% a year. So the stretch goal is 30 people. In terms of the giveaway, I'm giving away the book, The One Thing. It is one of my favorite personal finance books. And if we reach 100 likes for this video, then I'll be giving away 1 copy to the commenter below. So it's free, just tap like and leave an interesting comment below, and I'll announce the winner in the comment section. I'll see you in the next video.